We've got a good 30-35 minutes to understand Raamdeo's market idea, Raamdeo the businessman, and Raamdeo the investor. Mr. Agrawal, good morning. Hope all is well. So you're joining us from Ambi Valley, your house or your office?
Very good morning, and Nikunj, and I'm back to MB for just a day. So I'm joining from MB Valley right now. Winter is set in here. Its temperature is around 20. And it's a beautiful weather here. So I'm calling in from MB right now.
Things are looking beautiful for your retail business as well. We may call them as retail traders or investors or Robin Hood traders. They are making the broking business for the quarter gone by for your company look extremely charged up.
Yes, I mean, this is the core of the company. We started off in 87 from broking, and it has, I mean, the amount of changes I have seen in broking in last 33 years, I have not seen in any businesses. I mean, the kind of transformation, the kind of change of the players and the technology intensity, telecom intensity, distribution, influx of the foreigners. So I think it has really gone through everything and much more exciting going forward with the internet around. So this business is clearly consolidating very rapidly, and yet it is exploding. I mean, this is a very unique situation where it is in terms of volume, it is exploding, and in terms of number of players, it is consolidating. And there is a value migration also from a traditional full service broker to discount brokers, new age of discount brokers. So I think it's a very interesting situation now.
So your business, and I'm talking about the listed business, has four wheels. The retail business, the retail or the broking business, it has the mutual fund business, it has the Nbfc business, and you have a large investment in the prop side also. We've spoken about the broking business. What is happening to the mutual fund business? Because unfortunately, the data which we're getting from the mutual fund industry seems to be indicating a very different trend. While retail broking and brokerage business is going higher, the mutual fund business is contracting.
Yes. So, I mean, my take on this is that, the pendulum swings from one side to other. So we saw between 14 to, say, 17 or 18, I would say, a one-way inflow. I mean, starting from January 14, I remember when Mr. Modi was nominated for being a Prime Minister candidate in Goa. And after that, the whole thing turned around. And for the next 3-4 years, every month we saw the flow, and at some point of time, it became very, very large flow. And then from 18 onwards, it had been subsiding. And now, for the last 5-6 months, we are seeing continuous outflow of about 4,000 to 5,000 crores, 6,000 crores of outflow. Even this month, October also, we saw some amount of outflow. So this is the nature of the business, and so that will continue. But at the end of it, this business is run by mark to market and net inflow or outflow. So right now, mark to market after March has picked up very well with the indices coming to almost all-time high. So our AUMs under management is just about 5-7% below all-time high. Though we have some kind of outflow. But net outflow is not much in the sense that we are able to garner a lot of money, though it may not be as profitable, but we are able to get good amount of money in our passive funds also. So all in all, we are flat or little negative in terms of outflow, but mark to market is bringing us back to the pre-COVID levels. But the yields are majorly impacted because of regulatory actions and change in the mix. So our yields are lower, cost is more or less fixed, so profits are lower in the asset management business, though it is better than last quarter.
Let's walk us through about what your fund business, what is happening to your investments. When you came out with your Q1 numbers, I'm sure there was a need to do mark-to-market markdowns. Now markets have gone up, need to mark up has also gone higher. How has that part moved for you in your quarterly numbers?
Yes, so I think 170 crores have been added to the net worth or profits for the current year. because of changing the accounting system. So that has yielded almost as much as the market movement on all the invested money. I mean, half the balance sheet is invested in mutual funds and various products. So that has tracked the entire whatever. If the market is up 40%, so it is up 40% types. So for this quarter, it is about 170 crores. And incidentally, this is a very important part of Motilal Oswal Financial Services so far, in the sense that my 50% of the balance sheet, my net worth is about 3,400 crores now. Of that, about 1,700 crores is into the listed or unlisted investments. And other 1,700 crores is in my operating businesses. And of that 1,600 crores, half of it is in housing finance and other half is in the building and other operating assets. That's how the balance sheet is laid out. So what gains you see of 170 crores is for the quarter for that half the balance sheet.
Mr. Agrawal, you understand the importance of scale more than anybody else. In your investing career, one simple formula which you've used is look at the size of the opportunity. Look at companies which can scale up in the size of the opportunity. The question I'm trying to perhaps arrive at is, are you committed to run your Nbfc business? Because when I speak to market participants who track your stock, I get the following. That why is Motilal Oswal Financial Services in the Nbfc business? Because they will never be a large player in that business. And now that the perception value of Nbfc business has come down, the good work of your broking and AMC business will always get pushed back.
I mean, yes, market always have, we keep getting this feedback. It's not strange to me when you are saying this. But you know, we have a design in mind, how we want to build this company. And one of the things was that free cash flow, see, in AMC and broking, both have almost 100% free cash flow. Whatever I make, it's a free cash flow. I can either pay out by a dividend, or I can invest in my portfolios, or I can attempt to build a business, which we think over a period of time we can build it. So one other thing we thought was that some amount of equity capital, if we give and bring professional management in housing finance business, probably we can build a decent mortgage business, because we thought it's a collateralized business and it has long-term future and huge opportunity. That's what we thought, and with that we started building. And we were as far as the scale is concerned, in affordable housing, we were the fastest to go off the block. I mean, first 3 years only, we built almost a 5,000-6,000 crores book, which is a mistake in the sense that the pace at which we went. But we can never achieve a scale. That's a wrong notion. Right now, for conservatism and our own, risk aversion and risk control makes me stay where we are, and we are going very cautiously. But once we learn the game and once we get confidence, I think we can scale up to make it anything, because I don't have any constraint in terms of what should be the size, where it will go, what ticket size I do, which geography I pursue. I think the main thing is, have we got competence and confidence in this business? That's the main thing. Right now, it's a kind of a status quo, and we have new team now. Wonderful team has come, and let's see what happens in next 1 year. So I would not write off from a growth perspective. I would be, I can't give a date or something that from next quarter or something it will start growing. But I am very optimistic and confident that we'll be able to deliver on this.
Well, good to hear that.
Yeah.
I'm sure when you saw the auto numbers which came out over the weekend and Hero MotoCorp and Maruti underlying commentary which came last week, your jaw must have dropped with the kind of bullishness they are sharing and the kind of bright future they are painting. Itna demand kahan se aa raha hai? Economy is in a stress and auto stocks and auto sales are completely back on track.
Yeah. So for last 1 month or so, I mean, this festive demand, I mean, there are 3-4 sources of demand. One, the year started with literally zero inventory, because the the entire automotive industry was transiting from BS4 to BS6. So clearly, inventory levels were very low or almost nil. Second, and at that point of time, only COVID hit. So the transition was zero. Second, after that, COVID impacted the demand. So there was a pent-up demand. The guy who wants to buy a motorcycle or a car, if he can afford to buy, he will definitely buy. So there is a pent-up demand which is coming in slowly. Third, the normal demand, whatever has to happen. Fourth, the COVID-related demand where a lot of people are looking for individual transport as a preference to public transport. So we don't know how much is a permanent growth. Like today, Finance Secretary is saying that this is what we are saying is not only a pent-up demand. There is also some amount of growth. But I mean, what Mr. Bhargava said, that only after festive season is over, then only you will know whether actually there is a natural demand growth in the economy. Like, is there a 10% pull of additional growth other than pent-up demand? That you will come to know. You will come to know only after festivals, because even all these leaders who are very experienced leaders of the economy and of the companies, they have also completely been bulldozed in terms of just 1 or 2 months back. They were asking for a stimulus for reviving the demand. And today they are saying that please defer it for some time. Let's reassess whether there is a demand is back very strongly. So I think it's very unpredictable situation because a lot of other things have changed. Liquidity situation has changed completely in the economy. Cost of liquidity has completely collapsed, and raw material prices are down. Sales marketing costs are down. So lots of things are happening, which is very difficult to figure out. Even GST collection of 105,000 is staggering. So I would say that things are better than what anybody expected at some point of time.
So if markets always tend to discount the future and if they tend to price future well in advance, what are stock prices telling you? Are stock prices telling you that we are in for a big economic recovery, a big earning expansion, a big P expansion?
Nico, I've never been good in predicting, this kind of future, but I'm feeling nice and confident. I can tell you this, what is my state of mind. I'm feeling nice, confident. If I get money, I would like to blow it today only in the market. So that kind of confidence is there, when the markets are down, I think you need to put extra energy to become confident. Today, that is not the so. There's a natural confidence because what we are seeing in the economy is giving confidence that the things will be taken care of. And the fall in the COVID death rate numbers on a day-to-day basis, when the rest of the world is, Europe and America is surging, here we are talking about less than 500 deaths yesterday. I think 417 or something. That's what I'm watching. So that is taking away a lot of fear, which had engulfed the economy and the consumers. I think slowly consumer confidence will come back, and hopefully if there is no second wave, by turn of the year, new year may start with a bang, full consumer confidence might be back. Liquid will be ample, cost of liquid will be lowest. So we could be in for some unusual kind of a strength in the economy.
I have to ask you on HDFC Bank, a stock which you have always praised for its management bandwidth and for its leadership. There is a change of guard. Now, I can throw examples at you where change of guard has worked. I can also throw examples at you where change of guard has not worked. But as a shareholder, what is your view on HDFC Bank as a franchise now that you have the longest serving CEO of HDFC Bank, or the first CEO of HDFC Bank, he has retired?
Yes. So, Nico, I think we can do a zero-based analysis in the sense that when an era is over and Mr. Puri built, unbeatable franchise, and he has laid down the office, and now a new competent management is coming in under the same brand and same kind of aspirations. So, but look at the opportunity for the private sector banks. Today, when the economy is coming back, which are the agencies who are ready to lend, and who have the competence, capital, and determination to go ahead and build balance sheet and lend? And there, I mean, even if you see the best time is now last 12 months. Which are the balance sheets which had a bearable stress in their what they have? And I think Hdfc Bank came out with flying colors in terms of what 4 quarters have done or 3 quarters have done for them in the balance sheet. So what is important is, I mean, one thing is that what happens in the future, but one thing is what is there today. I mean, this machine is working. It's a absolutely solid balance sheet, solid P&L, and solid customer base, and then the scale and the kind of scale and the reach they have. That's there with it's almost rare in the Indian context. So I think 8%, 9% of the Indian banking and having ambition to go to like 14, 15% of the thing. I think, and then competition. Where's the competition which can spoil the show? I mean, you have another three, 4 banks. They themselves have enough opportunity. So I don't think there is any kind of a stress. And for me, I am saying that yes, I mean, nobody can replace Mr. Puri immediately. But when the guard changes and when the new CEO is being given the limelight, you see, I mean, I can tell you a lot of examples where a lot of when this leadership changes, if business tailwind is there, I think leadership change becomes much easier. I mean, I'm not saying that this job is that easy, but if the business tailwind is there, then the change of leadership is the blow is far lower. And I think it's a continued leadership. The incumbent is 25 years, as experienced as Mr. Puri. I mean, we cannot ask for anything more. This is the best which can happen to the stock.
Classic example, Mr. Agrawal, which I share with our viewers, is that Steve Jobs may be the man who really took Apple to a next level, but for shareholders, large part of wealth has got created during the Tim Cook era, when Apple certainly has added almost a zero to its market capitalization in terms of creating shareholder value. So, Mr. Agrawal, today we can divide the world into 2 parts. You know, in 2000 we divided the world into new economy and old economy. Now we can divide the world into digital and non-digital. How exactly are you investing in this so-called digital world? Would you invest in digital dominated banks? Would you invest in Indian IT companies? Would you invest in insurance? What I'm trying to understand from you is that in this digital world where the divide has happened because of technology, how are you investing?
So first thing is to invest in digital companies themselves, in the sense that the companies which are able to inherently take advantage of power of digital. I mean, power of digital means the way I'm saying is that the reach is literally, I mean, the planet is the reach. I mean, that's the kind of possibility which Amazon and all they have created. But at least in India, it's a pan-India reach for most of the companies. I mean, those who are digitally powered. And earlier they were constrained by, okay, my distribution is in this state or this district, or say regional. A lot of these regional businesses will become suddenly national businesses. So I am saying whether the corporates or the managements are geared up to take that advantage, because every company cannot take advantage of digital processes unless they are, they have the software and they have their fulfillment system to harness this digital opportunity. So we are, at least I am very clearly looking for the businesses which might be for the old economy, but they are benefited by the digital processes. So, and we are finding that because ultimately you're looking for growth, and growth is coming disproportionately in the companies where the mix is changing towards digital businesses. So yes, it is very integral part of our questioning, and we are trying to put more and more ideas. At least I am putting up an analyst only to find the businesses which are going to be benefited by the some kind of a digital change in their procurement, in their cost management, in the sales, fulfillment, distribution, wherever. I think we have to be, because this is one power which is mother of all the power for consolidation and bringing growth and cost management, even the customer service, customer satisfaction. It is all sorts of things. So now digital strategy is no more just a service to the companies. They have become the strategy itself. So yes, it's a very, very important point that corporates are going to be benefited by digital push.
If Raamdeo Agrawal, the investor, has the option to invest in a pure broking business stock or a pure AMC stock, where would he invest?
Oh, any day in pure AMC. Because AMC is a stock, it's not a flow. Whereas broking is a flow. So, that's a very cyclical. Both of them are free cash flow business. Good thing is that both of them are high quality in terms of you make 100 crores, almost 80, 90. In broking, I would say 3/4 will be free cash flow. And in AMC, 90% will be free cash flow. So to that extent, it's fine. But the opportunity size for asset management is on the debt side as well as equity side. On equity side, again, you have the passive as well as active. So, and the wealth which is going to generate in this country when we go from 3 to 6 trillion is quite staggering. So, and there are entry barriers in asset management in the sense that you have to be seriously good in the way you do the stuff. But broking entry barriers are low and players are too many and the compensation is very low. The value added is also very low. So, but then broking volumes are very, very large on a daily basis and it's cyclical. So I would prefer second one more because there is a productivity, there is a level of profitability and cash flow in the asset management. So I would think that markets and on a 10-year basis, I think AMCs look better bet than broking. But broking in India is no less because it is consolidating. So if you're on the right side of consolidation, that also will be very good in terms of cash flow. But the P multiples, I think, will be significantly lower than asset management side.
Mr. Agrawal, while the quest to find the next compounder and the next multi-bagger is always there for every investor, frankly, if I look at the last 10 years in India, very few companies have become great companies, and you can count them on your fingertips. DMart, Bajaj Finance, and to some extent Indigo. In 10 years, the world has moved. Liquidity has been down. Conditions of liquidity have been benign. Inflation in last couple of years has been under control. Yet India has only seen 3 world-class companies. Is that an eye-opener for everybody that in India very few companies can scale up and very few companies will create a lot of wealth?
No, this is a very specific case of particularly last 4, 5, 6 years. We have somehow, as a nation, we have not grown in the sense that we have not grown as rapidly as we were growing in the past. So that slowdown in the growth, maybe GDP grew at about 6% or something like that. But corporate profits has been disaster. The way corporate profits between 14 and today is declined is, I could have never imagined that corporate profit to GDP, GDP kept on growing at 10, 11, 12%, but corporate profits stagnated or actually went down. So today, I'll give a color of corporate profits. In 2014, about total profit-making companies, aggregate profit was, say, 4.5 lakh crores. The loss-making companies were losing about 50,000 crores. So net total profit of the corporates were about 4 lakh crores. Today, in 1920, if you do the numbers, our corporate profit is lower than 4 lakh crores. Why? Not that our profit-making companies have not made money. They've made money. They've gone from 4 lakh crores to 4.5 lakh crores to 6.5 lakh crores. But the loss-making companies, their losses are staggering. From 50,000 crores, it has gone to about 3 lakh crores. So, so the amount of stress which is there in the corporate profitability, whether it is in telecom, whether it is in public sector banks, whether it is in Nbfcs, whether it is in realty, the entire real estate sector and all the capital goods sector. And so there is a lot of problem. Authorities must look into why there is so much of stress in the corporate profitability. And since there is a general corporate profitability stress, I think you will not see emergence of many companies during this period. There are companies which have scaled up, but you will not see birth of the kind of birth you saw between in 95 to 2000 because of the boom in software, and then 2002 to 2008 because of the boom in commodities and real estate and other things. So you need some kind of for the lot of big flowers to come out. Of course, small flowers will also bloom, but for the large, lot of big companies to come out, you need corporate profit build up on a sustained basis.
So for an investor, Mr. Agrawal, and for an investor like you who believes in QGLP philosophy, which is growth at a good price and the longevity of the business, then would you say the options of investing are only 50, 60 companies, not even 50, 60 companies, 30, 40 companies?
No, it's not that narrow. I mean, I would say about 150 to 200 companies are there. I mean, see, Nikunj, there are 5 sectors from where bulk of the things are there right now. One is, of course, IT. IT is you'll be surprised, in 95, IT had 1% of the total corporate profits. Now, it is 24% of the total corporate profit is IT. That big kind of transformation of the corporate profits have happened. So, it's a massive kind of segment. Then second is your consumer, all kinds of consumer. Third is pharma. Fourth is private sector bank. And fifth is, what is that? So, these are the 4-5 sectors which are bulk of automotive. So these are 5 sectors which have about almost 75-80% of the profits. And there is a massive, another factor, what we are seeing is that there is a massive consolidation in the profitability of the company. So top 100 companies would be earning in India almost 80-85% or maybe even 90% of the total profits. And in every sector, there will be only 4 or 5 companies which will be making bulk of the profits. So, so what is important is that, yes, this kind of consolidation will be there in every part of the world. It is very stunning here. In terms of number of sectors are very few. Out of 40-50 sectors, only 5-6 sectors are doing well. Rest all 30-35 sectors are not doing well. And hence, they're also not throwing 1 or 2 very large corporates which are contributing to the major profit. So, yes, it is challenging, but running a focused portfolio of 2025, I think you still have
Okay. Mr. Agrawal, 2 more questions.
Yeah.
Today, if I look at the big companies club, it is dominated by Reliance, TCS, Hdfc Bank, and then you got some small consumer, then you got the consumer names there. In 5 years, how do you see this club changing, and which are the 3 companies you think have the maximum potential to be part or to cross that hump of 1 lakh crore in India in terms of market cap? अगला 100 बिलियन, अगला 200 बिलियन डॉलर का कंपनी कौन सा बनेगा?
एक तो IT से आएगा, 1-2 IT से आएंगे. Okay, that is a sector which offers that potential. I mean, now the IT companies could be platform companies or whatever, that, but IT or IT-driven companies will be there. Second will come from private sector banks because that's a very large profit pool, very, very large profit pool. And that also has digital engine. All the private sector banks or the new private sector banks, they're all digital banks. So I see they're still they're making very big foray. They will be able to use their brand equity, reach, scale for underwriting risks. So I think that segment looks to be pretty promising. Of course, there is a digital disruption in their own business that remains a threat, but I would think still they have things going for them. Third, I think somehow pharma has been disappointing in the sense that pharma is global and local also. Very unlike IT, IT is a lot more global and very these companies, they don't do much of client service in India. Whereas pharma, the foundation is in domestic, and on top of it, you have global opportunity. So I would think that pharma should throw some surprising names. Maybe a little slower, but pharma has a chance to come up there in a big way. Yeah.
At any point in time, will the pure price and dividend yield and the intrinsic value of a cement company or a utility company, will that tempt you to look at that businesses. These are businesses which are getting hammered. Some are saying because of capital allocation, some are saying because of ESG, some are saying because of incompetent management, but the price is very attractive. As a fund manager, would you be using price as a benchmark to buy them?
Nikunj, our investment philosophy is very clear in the sense that high quality business, high quality management, and both is a very integral element of the valuation. If you put the valuation in front of the valuation, I mean, the moment you say it is 6p, then actually there's no point in discussing the growth. Okay, but that's not the style. What works for us, it doesn't mean that others will not work. It will work brilliantly well for others. So, but you need to have the kind of mindset. I mean, one sliver, one set of companies where there is a quality of business, quality of management, and growth. Though I may be willing to pay for the growth in the sense that, okay, it is not available at 6p, growth companies will not be available at 6p, but I should not pay exorbitant price. If company is growing at 20% and I buy at, say, 20p, or even if it is a high free cash flow company, I may buy 25p, 30p. I think so long as you are buying at reasonable price and growth comes through, which nobody knows, I mean, that is where the skill comes in terms of figuring out where the growth is going to come. I think you can start at 6p, and if you start at 6p and actually growth comes through, then you are literally sitting on a multi-bagger. So we have seen enough of this in the past. There is no one set mantra for making money. If you have found your way of finding stocks, and even the times keep changing, Nikunj, in the sense that today something is deep value. But if I have I remember in 2002-03, the hotel stocks were literally nobody wanted to touch it. But I had just the belief that India is going to make a huge comeback, and the hotels will be full beyond their imagination. This is what I had seen in Bangalore. So I said the whole country is going to boom. I was very bullish on India at that point. So we went and bought hotel shares, and we made tons of money because they were about $20, $30. So what is today out of favor? They are out of favor because businesses are out of favor, and rest all is a story. So if the businesses come back, if the economy booms, I mean, to 6, 7, 8%, who knows what will boom or what will not boom? I mean, when we think it is going to boom, it doesn't boom. When we think now nothing can happen in India, India booms. So what happens in the economy and what happens in the underlying businesses will decide the fate of these companies, not these theories of ESG and all that kind of thing. But I don't think those are things which are going to keep everything permanently down if the earnings start growing.
Mr. Agrawal, every time when we speak to you in and around Diwali, you always give us your new discovery. Couple of years ago, it was USL, then it was HPCL, then it was RBL Bank. I take the liberty of asking that same question because Diwali is now just 2 hafta dur.
Yeah. Nikunj, I think it is fraught with a lot of problems. I'm chairman of investment committee of, pure equity AMC. So I have to, my risk guys, they keep, nudging from behind. Please be careful about talking about a stock. So please give me a break on this. But so I would not like, because when I make a pitch, I pitch with a lot of conviction. And later on it may go wrong or right, but that's the nature of it. But current regulatory conditions, and I think rightfully so, we should not be selling, pitching our stocks in public.
I respect that. Really appreciate your time and certainly hope to see much more of you going forward.
Thank you. Thank you, Nikunj. Wonderful.